Hey there, everybody. Welcome back to 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. Wonderful to see you all once again. We are taking a look at what we have set up for us heading into the end of this week, following yet another tweet, right, by Roaring Kitty. So very interesting, maybe to break down. Maybe there's a new pattern forming up here where we're seeing him tweet at 8 p.m. Right? What in particular is he trying? Is he trying to signal that something is going on, perhaps settlement-wise in the background with this? Not sure. Right? Not going to do too much speculating, but I am going to take a look at some of the factors that are visible from our options data, our lending pool data, and things that have to do with our technical analysis to see if maybe we can get some insights into what our good friend might be pointing to here. So yeah, for those of you who might be joining us for the first time, every day during the prior to market open, I post analytics on GameStop on my X page. You can, if you're watching this on YouTube, you can find this link down in the description. If you're watching this on X, it is linked up at the, it is pinned up at the top of the page, I should say. So yeah, we're getting into a couple factors, especially kind of that stood out to me for the title here. Did start to mention this yesterday. We do have some of the elements of a gamma ramp, right? Of a trader positive, dealer negative call base gamma ramp that is building up. That is now, I will say, it is now in place. We do have the structure for something like that to be exploited by major players in our trading landscape, should they choose to do so. I'll break that down in a bit, as well as what are kind of the basic elements of that, and what sort of stands out to me, and sort of what says, okay, hey, this structure is in place. Talk about how that changed versus yesterday, and yeah, some weirdness maybe going on with the lending pool right now, and what that might potentially mean. So we'll get into that today. Thanks go out, of course. Sponsoring today's newsletter and video breakdown is to Goat Zuback. Thank you, Goat. Yes, thank you, Goat Zuback, as well as Dat Scruffdo. Scruffy, thank you so much for your continued support and friendship. Thank you so much. Yeah. So, right, nice tweet today. Could mean many things, right? We did see in there, I saw, some people always ready to break this down on Superstonk. Obviously, Roaring Kitty pointing out maybe something here to do with Moas, in that Fry, this character from Futurama, right? His dog's name is Seymour Asses, which I will note that on the cable broadcasts, I remember this as a kid, the dog's name was Seymour Butts. It was Seymour Butts. It was changes. So I didn't immediately get this because I always watched the cable version of it where it was Seymour Butts. But right, Mo Asses, Mo Ass. So yeah, okay, something there. So hey, heartening, right? Because there's been talk of like, oh, is he not in this play anymore? Does he not care about GameStop anymore? Is he just kind of running around doing these other trades? Is he doing this stuff with Unity now? He was doing this stuff with Chewy. Is the dog a reference to Chewy? What's going on? But seems to be maybe some inclination here that he's still he's taking a look at that, and he seems to suggest that maybe something is he's waiting around for something like this to still come up. Interesting, some people pointed out something like Seymour Asses had to wait 12 years, 84 dog years for Fry to pop up there. Maybe it could be something like that. It could be another meme thing like 42069 or something. Does this have something to do with the tech bubble burst? It could, not sure. Could it have something to do with the fact that GameStop had to, right, what really brought an end, right? And I think there's probably some more digging to do back with respect to the short squeeze in 2012, 2013 that I've pointed to in the past couple of years, specifically with respect to, say, this 200-week moving average, things like this. And that 2012, 2013 short squeeze being the sort of background event, the historical event in GameStop's trading history that cued Roaring Kitty, very strongly cued Roaring Kitty, Keith Gill, into being able to see what was going on in the buildup to the 2021 event. So, maybe this is just like, Roaring Kitty himself has been waiting 12 years, right? The 2013 was when the short squeeze, right, that was going on in GameStop back then had a cap kind of put on it, and then it started trading to the downside. It was shorted for a number of years again after that. So maybe this is him just alluding to the fact that he's been waiting 12 years for this to finally come to fruition, something like that. Just nice to have fun with these posts sometimes. But in any case, right, this did have a profound effect on our price action late last night, or at least it was coincident with some profound action in our price. Before we get into that, right, just kind of taking a look, touching back up on our current context. Obviously, been thinking about this Bank of Japan rate announcement coming up. It should be released around 7 p.m. Eastern time tonight. So that the reaction to that will get processed in some of the overnight markets, but then get assessed, futures trading, things like that in the broader market tomorrow. We are in a very different situation compared to the first Bank of Japan rate hike that we saw last summer, in that seems to have been something maybe that took traders, institutions, investors by surprise. We traded down for a good 3 weeks, like into that, right? So GameStop kind of traded in lockstep with that market retracement from around the 15th of July down to the bottoming on the 5th of August. So very, very interesting to notice that we are actually not in that situation at all, really. We just yesterday hit an all-time high in SPY. So if we enlarge this a bit, right, SPX, S&P 500 hitting all-time highs, top 6,100 during trading yesterday. And we're definitely still in this, as I outlined yesterday. We have some market optimism as far as what's coming up over the next couple of weeks in terms of where traders are, where we're trading, and what trading at these levels means in terms of the distribution of open interest and market maker gamma exposure, or I should say trader gamma exposure. Yeah, I mean, sort of as we go into today's trading, we can at least forecast for today that, barring some, cataclysmic event that comes in, we're probably looking in terms of SPX to be trading within this kind of 60.75, 6,100 range, kind of, right? We have some looseness in here that allows for some kind of steady grinding up and down. And then we've got these kind of two concentrations of call gamma kind of above that range. So we look to, at least as far as SPY and as far as futures, look to have rejected the 6,100 level and are kind of heading back down into this territory. But certainly the way that this is set up, heading into today, it looks like we're at least in for some continued stability, even if it doesn't mean that we push to a new all-time high again today. So, right, keeping that in mind, that those types of conditions are generally favorable for at least GameStop in maintaining its price. We only see these, or recently we've only seen these kind of these episodes where GameStop's floor kind of falls out, is when we have these broader market retraces. So the last kind of really big retrace we saw was back here, as I outlined, 7.15 down to 8.5. And GameStop did the same thing. It traded down from $29.91 all the way down in the pre-market to like $17.50. So something very similar relationship to the moving averages. Here, right, we can see, we're kind of, that all-time high is kind of overextended above our moving averages right now. RSI was looking fine on the daily chart for SPX, but, we could see like a correction kind of back here. I think that's what we're already kind of doing here with the 50-day moving average. Kind of a correction here, maybe wait for the 20-day to move up top, and then, maybe continue something like this, and then continue up like that. So we, get a few day correction there, kind of move back to the 50-day. That certainly looks like what's figured now. Obviously, I don't know what's going to happen with the Bank of Japan decision. It may already be priced in. There may be a kind of fake out, kind of slight dip. I'm not going to speculate too much on it since I don't spend that much time looking at it, but I can at least say in the immediate context heading into today's trading day, it does look like we're still going to be within those stable trading conditions, independent of what is about to come with the Bank of Japan rate hike decision. So keeping that in mind, stable trading conditions in the broader market, stable trading conditions in what we saw with GameStop. Definitely day traders happier with what we saw here, right? Staying in this upper channel, which on our 4-hour chart, right, we have a more range bound regression channel, kind of sub channel within this broader bearish structure. If we can take a look at it down here, we can see a little bit more clearly. Right, so regression channel, bearish regression channel here, kind of ejecting us from this former bullish channel. And then we have this range bound kind of sub channel forming up in here as we're kind of looking for consolidation. That's kind of been the question mark. Where is the stock going to consolidate? Prior to yesterday's trading, we're still kind of listing down new lows. Obviously, being bought back up on Tuesday was nice, but kind of still listing down, got a little bit of a bounce here, but then lower lows, lower highs, even with that gamma ramp exploit we saw on Friday, lower lows, lower highs as we continue to move down within this structure after this huge teleport dip. Obviously not what you'd like to see in terms of forecasting some sort of a recovery, or at least consolidation. But this, in terms of logging this kind of after hours higher high and then lower low during the day within this trend, definitely helps flatten this out. Although we are kind of at a collision point here between the sub channel and the bearish regression kind of macro channel we've been in. So there'll probably be some indecision there. We do see the top of this channel coinciding with the 54-hour moving average. So we could kind of deflect off of this. Maybe we move up into this kind of arbitrage area, this spot between the 204-hour moving average and our regression channel there. Those are certainly right. It's still kind of early to suggest too much of a technical structure, but that's kind of what we have facing us right now. So we were trading within that upper bound there. Our VWAP channel more or less opened up to encompass this. So day traders certainly a little bit happier. We see our moving averages just kind of hanging out around VWAP, and then us trading within this channel several times. So traders happy with that. IV continue to grind down. It's about 77%, slightly above 77% on the 30-day implied volatility. So very low, right? This is back into like early October of last year. I think our lows were something like 60, 68 or 67% on the 30-day. Definitely way down in like the 50s on the 10-day, maybe even upper 40s, which is what the lows that we were seeing back like at the bottom of that kind of March, April pit. So we're not quite back there, right? There is still IV that can be sold out of this. We might see something, right, because of this, we might see something like kind of a hitchback sort of a thing where it pops up a little bit, just like we saw last Friday, right? We have these episodes where, it'll pop up. We'll get like a 15 or 20% IV appreciation that immediately kind of goes back down. In these range-bound conditions, definitely volatility sellers love that, right? And a major part, right? We think, okay, these types of gamma ramps, these little pops, like this was after hours, so this wasn't too much to be exploited by the options market, but like what we saw last Friday with this Friday gamma ramp that then immediately got shorted back down. I mean, volatility sellers are happy to see that type of event emerge, or even to do things that can kind of pull the trigger on making that happen, because then they can just go ahead and sell weeklies, like sell a large volume of weeklies that are out of the money, or just kind of layer these types of volatility trades where then instantly they just profit a ton, right? Something like the 35s for this week went up. They were like a 200% trade. Obviously, if you had them at the bottom, no, they were like a 300% trade if you had them at the bottom there. Before that ramp took off, they went from like 10 cents all the way up to like 40 cents. But then think about that too. Then by the end of the day, they went back all the way down to 15 cents again. So, okay, great. If you were able to enter that prior to that ramp going off, obviously harder to time that, obviously harder to enter that properly. We did see some traders who tried to enter that previous day, entered it around maybe 20 or 22 cents. So, I mean, they still made well off of that type of trade. But volatility sellers then can come and do the even higher probability trade, which is, okay, here's the top of the gamma ramp, this out of the money contract, just 4x'd, right? In a matter of minutes. Yeah, go ahead, sell 35s out of the money for next week. Of course, do it, right? Can make, volatility sellers will do that and then make a lot of money. So when we get into this situation where volatility gets low, these types of gamma ramp episodes can be a way for volatility sellers to, institutions to juice, even for a short period of time, the IV, so that they can sneak in there with a lot of, right? They can take advantage maybe of trader euphoria, especially of retail trader euphoria, betting on, oh, is it going to go higher? Is it going to go higher? Is this MOAS or something like that? And then they just go, okay, sell, 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 sell. They sell all these short calls. And then within a matter of minutes, a half hour, the IV is back down almost to where it was at the base of that takeoff. They sold a ton of out of the money contracts, which of course retail loves to buy because they're so cheap on a per contract basis, right? You can buy them with small amounts of money, but of course the probability that they will actually end up profitable is extremely low. So that's a high probability trade that then dealers can take advantage of by juicing IV in that way. So important to take that into account, that we might get these kind of switchbacks for several weeks if we're going to go into a consolidatory period right now, that maybe this lasts for a while. Even if we see episodes like this that we see on our screen here that we saw last Friday, we could get a couple of those. Like, that's really right. That's what we saw late August, September into October. We saw maybe like 4 or 5 of these type of moves while IV, right? We had that IV uptick during the earnings period, but with the exception of those 2 weeks prior to earnings, into earnings, IV basically hanging out in these levels, maybe maximally kind of topping out in the lower 90s when we had those gamma ramps. Obviously, they were a lot stronger when we were in the IV appreciation, the 2 weeks leading up to Q2 earnings report. They were a lot more profound in terms of what they were able to exacerbate, how much they were able to appreciate IV. But that's the dynamic that institutions who have strategies to sell volatility, who cause these big cycles. It may seem to the average kind of buy and hold retail investor that these periods of kind of flatness are boring, or there's not much to do, or something like that. Or you see the price go up 50 cents, it goes down 50 cents. Sometimes it goes up $1 on a Friday. Yeah, but if you're selling thousands and thousands of options contracts into these, if you're an institution that can do this, if you're a dealer, if you're a market maker, man, that is where you are making your bread and butter, being able to profit off of those very quick, very short-term deviations in IV. So regardless of kind of the longer term stuff. So definitely something to keep in mind as we head into these next couple weeks. Yeah, options volume very low yesterday. Explains, mostly short calls, a mix of short and long calls being sold, not really a lot of in the way of puts. Yeah, very interesting in terms of that pop. I'll also point that out, right? We did go up. This was a nice data point to see here in terms of mapping out our technicals, because I had mentioned that we had used the 50-day moving average as a resistance point on Friday. That was a lower low, and that said, okay, if that's going to be a technical resistance level, that says that way down around here, around 25, that's then kind of implied as a technical support on the same chart. What we did see, however, with last night's kind of this XTO overnight period pop that coincided with Roaring Kitty's post, is it went all the way up to the 204-hour moving average. So we're kind of, that presents another technical navigational reference point, which is much higher, right? Definitely opens up our trading range to the upside a bit, and then suggests something more consolidatory, suggests, okay, maybe where we were this range before, that's kind of a bottom. This will kind of bottom out and flatten out kind of above in the 27, 28 kind of area. That definitely lines up with our max pain values into the next couple weeks. But then it says, okay, the upside for this is not going to be like 28.50 or 29, but yes, it's going to be right up there, up close to the call wall, and that's going to sync up with our technicals. So that's definitely a better data point as far as moving out of a bear trend and into something more range bound, like what we saw last October, right? Last September, we moved out of a bear trend and went into 2 months of range bound consolidation, which, yeah, definitely for option sellers was very, very profitable. And then also allowed money to kind of, right, money on the sidelines to say, okay, this thing is cooling off. IV is kind of low, so we can enter into calls. We can sort of build out positions down the road. And then that set up a lot of buyers to be in position to profit from GameStop moving back to the upside, which allowed for a much broader movement to the upside of, I think, $12 or $13 we saw. No. It was from low to high. It was something between October to early January. We had basically a $15 movement in the stock, 14.50, or 14 even, something like that. So yeah, there need to be these consolidatory periods in order for money to kind of go, okay, can I re-enter here? Can I re-enter calls here at a good value? Is there strength to the downside, or are we just kind of going back to where we were? Was this just kind of a pump and a pop and nothing's really fundamentally changed about where we're going? Or is this kind of just a minor cool off kind of setback, something like that? So definitely if we see this kind of move out sideways for a bit, that's going to be very promising for then what could potentially come up in late March, early April, which, not for nothing, is suggested by the angle here of our weekly RSI trend line. So I had pointed this out. Well, actually, I should say first and foremost, Roaring Kitty pointed this out, that this was a key indicator in the 2020-2021 events, that really, if you watch, we got this pistol formation, we got this bull kind of pennant formation in the weekly RSI, and that these two data points, basically the staff and the tip of this pennant formation, then served as two data points off of which to project an RSI, a weekly RSI trend line, above which GameStop's weekly RSI stayed until it basically ran out of room and then exploded upward. Now, because this is weekly RSI, right, this looks a lot tighter. Actually, you can't quite see that there because my camera is in the way. There we go. Right, so down here, right, you can see stays up, and then it just kind of runs out of room. But these, of course, are months. I think this goes OPEX to OPEX, or this is the year. Yeah, so this is a period of a number of weeks. This is several months here. So each of these blocks, I think, is maybe 3 months. Yeah, each block is 3 months. So we did get this after several months, right? We got this touch here, but of course, we didn't run out of room until we had basically about a month of space there, maybe 3 to 4 weeks. And then with only about 3 to 4 weeks left of kind of this right triangle is when then we really exploded to the upside. So right now, based on this formation, we have a similar trend line. I can make this a little bit bigger. Nope, that's what I want. We have that same trend line, and it looked like we were going to shirk that. It looked like this week we were, oh man, look at this shorting coming in. It looked like we were going to get blown through that bottom there, but instead we're just trading now. We've been trading for several days now, for the whole week, right on top of that line. And it turns out so far that RSI weekly trend line has held. And we are kind of trading ever so slightly still on top of that trend line. Now, it's going to take some time for this to develop, right? We don't start to run out of room and get this right triangle until about the end of March. So the RSI cross here in 2021 was the end of March. So this was about a 3-month period, and we ran out of room, 1 month, essentially 1 month into that period. So we're just about there, probably another, again, this would put us somewhere around March. So if we consolidate and kind of trade up, even trade around 30, we kind of hang out here, maybe get a little bit of upside into February, into early March, then that's going to put us basically in this zone, staying above this RSI trend line until, right around here, mid-March, which is going to line up with GameStop earnings. Richard Newton was also very good to point this out. I highly recommend you go check out his videos, especially his recent videos as he's been thinking through swaps. Interestingly, right in that kind of 2-week, we're going to have a 2-week IV buildup, right? So we're going to have earnings, quarter 4 earnings are going to be released probably around the 25th or the 26th of March. We're going to have likely a 2-week IV buildup If we kind of go range bound into there, that's going to be pretty profound in terms of how much IV is going to build up, just like we saw, back here. And we even saw this happening in the background of our trend for the Q3. So Q2 and Q3, we had that. It was kind of disguised by what was going on here with Roaring Kitty's return. But then, of course, all the way through here, we also had these were earnings periods, IV buildup. So we're going to get that 2-week IV buildup starting around the 11th of March, 11th or 12th of March into the 25th or the 26th of March. Richard Newton, of course, has been very good to point out that we have, let's see, what are the exact dates? On the 11th of March, he's projecting that on the 11th of March and the 28th of March, there are 2 swap roll dates that are coinciding. So definitely go check out his videos if you want a deeper dive into that. But a lot of things coming together there, right? We'd be running out of room here in terms of our RSI trend line. We have this 2-week IV appreciation kind of showing up around the 11th or the 12th. Supposedly, we have these 2 IV roll dates on the 11th of March and the 28th of March too. So yeah, some interesting things, right? Regardless of what ends up happening, March is going to be interesting. March, kind of early April, perhaps. So definitely interesting to keep in mind and take a look at that on our weekly technicals. In terms of options changes, shifted toward the ask. We did get some more OI on the call side in the money puts coming off the board yesterday. I wanted to point this out. We did have somebody who perhaps suspected something that might have been occurring heading into our overnight or our after hours period, or maybe into today's trading, is we had right before the close, we had a pretty high volume of new $30 calls for next week. So January 31st, $30 calls come in, about 2,000 of them at the ask. Right in this zone, so right before the close. So we'll see. I mean, if we end up trading up today in reaction to whatever it is that was coinciding with Roaring Kitty's tweets, then maybe that person will profit. Maybe that person knows something. Maybe that person was also looking at the same thing that Roaring Kitty was in terms of why, for these past 2 posts, Roaring Kitty has chosen to post. Is it 2 or is it 3? No, it's actually 3. Right? He's been posting when the market is closed. At 8 p.m., I believe, both times. So on Christmas, on New Year's Day, he posted at 8 p.m. Eastern time, and this time too, although the market wasn't on a holiday, it was still closed. So he's been posting at 8 p.m. very curiously. So something he seems to be suggesting, maybe something is happening around that time, and maybe this is a part of his strategy for continuing to jump around the edges of what's going on, maybe with these basket swaps or this whole mess of a black box that's going on behind the scenes with GameStop that maybe these institutions are trying to keep controlled. Certainly that it's always sad, but truthful would suggest is a part of the continuation of swaps going back all the way to 2008 during the mortgage-backed securities crisis. So very interesting. Max Payne still sitting at 27.50. Wouldn't be surprised to see a close stick around there, especially because we moved down a little bit, right? Some of our Max Paynes have been reduced by maybe about 50 cents heading into early February. February OPEX is staying pretty consistent at 26. February 28 moved down to 26, but I mean, still very light in terms of open interest. Interesting, a pretty decent volume of total open interest here, but you can see we're 27.50 is right kind of dead even in terms of where our call and put OI is distributed. So we could see something like, based on our distribution of gamma, right? We have this chunk of concentrated call gamma that seems to be, right, we have seen disproportionate volume at the ask, which means dealers are net short calls at these strikes, which means that should our price move back down here into the 27.50 area early on Friday, because of how much call gamma we have accumulated up here, we'll get this effect where dealers will, okay, we move down here, they'll shed they'll shed a bunch of their gamma hedges, they will shed a fair bit of their delta hedges, particularly with respect to time, so charm, IV, if it stays low, they won't have to Vanna hedge that too much. But we might see that phenomenon where an institution comes in, like we saw last Friday at some specific time, drops some concentrated options volume, drops a major share order, and then it causes a chain reaction, right? It'll bump up the price as dealers hedge that position. That will then cause, that hedging will then cause more hedging, will then cause more hedging, will then cause more hedging, and could shoot the price basically all the way up until you kind of run into this hedging dead zone here on the other side of 30. It'll even get pulled up a little bit there, depending on how intense it is, but smack into that call wall there. Now, that's not to say that that definitely has to happen. It's important to keep in mind that dealers have been doing some weird stuff with shares available to borrow. So we had seen during the day yesterday, they got up to 2.6 million actually in total, but 2.5 basically into the end of the day. And then all of a sudden, very late in the morning. So this was after they basically didn't touch these. We had all this overnight activity, and then 2:30 in the morning, sometime between 2:15 and 2:30, somebody went ahead and borrowed 500,000 shares. I mean, why would you borrow them at this time, if not to do some sort of settlement activity? But not only did they borrow 500,000 shares, then at 5:30 in the morning, somebody borrowed another 500,000, and then another 100,000 at 7:15. So, okay, and then about 200,000 of these came back as of the time of my drafting my article. So what does this mean? What can this mean? Well, perhaps these are being used for synthetic liquidity purposes, right? Perhaps these are being used to settle FTDs. I think someone mentioned and pointed out that we were sort of around the deadline for basically kind of this boofing window, as otherwise Category 42 has called it, this T+35, give or take a few days, given, not sure with holiday exemptions, FINRA holiday extensions, I should say, corresponding to the price activity on the 5th of December, this big $5 move up from $26 to $31 around the time of Roaring Kitty's Time You Cover tweet. So it's possible maybe this was used, maybe whatever happened at 8 p.m. last night, that kind of disrupted something that had to do with settlement or some of the synthetic liquidity. But that's a lot to see 1 million shares kind of go down there in the middle of the night, or super early in the morning like that. The other thing too is that possibly some of these shares could have been borrowed preemptively in order to use them to hypothetically prepare to tactically control the price going into today's movement. If we today's price action, if we get some euphoria, if we get some traders kind of pushing the price around in this level, around where we're trading now, in this kind of stable 28 to 30 range, where we have this high call gamma concentration, that those shares might be used to try to control the price and keep it from maybe getting too much out of hand, to sort of allow maybe something like a bullish open and then kind of short the price back into the 27.50 area. One, in order to accommodate max pain, but two, to possibly accommodate something like this gamma ramp scenario heading into the end of the week. So definitely important to keep that in mind. As far as any other kind of forecasting, just have to see what plays out, but definitely interesting to see this kind of juggling around in the Len pool with respect to Roaring Kitty's post, like when he's posting, is there something going on back there that he's kind of pointing out to us? Very interesting to see that big of a liquidity shift in such a short period of time without, say, corresponding price action, right? We've seen something like that 11/29 and December 2nd, right? We saw big changes in the available shares to borrow, but we also saw millions of shares dumped short onto the tape while that was happening. So a little bit less of a question mark then versus now, where, okay, yeah, the price retraced in this overnight extended hours period. But are those shares necessarily tied to that? This kind of overnight extended hours thing is pretty new. So very interesting to keep in mind. Yeah, we'll have to see what things look like heading into today's trading, heading into tomorrow's trading, whether market makers, dealers, institutions might set up something like an intent to exploit this type of gamma ramp, right? To exploit this concentration of gamma by moving the price to the bottom of it and then kind of setting it off in order to maybe then go ahead and pivot and make more money off of some IV sales. So we'll have to see. But in the meantime, good luck out there. Thanks so much, everyone, for watching and listening. We will see you tomorrow, both in our in the breakdown video and tomorrow night's live stream at 4 p.m. after market close. So thanks very much again. We'll see you.